The stock of Leap Therapeutics Inc., trading under the ticker LPTX, is currently sitting at $0.45, reflecting an intraday movement of plus $0.04 or approximately plus 9.18%. Now, that 9% jump might seem like a typical volatile swing for a small-cap biotech stock, especially one that has been on a long downward slide from its 52-week high. Most casual observers seeing this price action will assume it's related to some minor data readout from their lead oncology candidate, DKN-01, or perhaps a routine financing update to shore up their cash runway. That's the typical expectation for LPTX. However, the true, unexpected driver for this sudden, sharp interest is something completely different, and it's a profound shift in corporate strategy that very few saw coming. LPTX is essentially morphing into a proxy for a digital asset treasury company. This is an almost unheard-of pivot, with the company announcing a rebrand to Cypherpunk Technologies Inc. and revealing a $58.88 million private placement led by Winklevoss Capital to initiate a digital asset treasury strategy focused on accumulating Zcash's native coin, ZEC. This completely changes the narrative for a company whose traditional focus was on developing targeted immuno-oncology therapeutics. This action immediately establishes a powerful curiosity loop, because the investment community is now forced to grapple with a dual thesis stock: a biotech with an oncology pipeline suddenly fused with a significant, privacy-focused cryptocurrency treasury. This tension between the slow, regulatory-heavy world of clinical trials and the fast, speculative, capital-intensive world of digital assets is what's creating the current volume and volatility. The general belief about Leap Therapeutics until this announcement was straightforward. It was a clinical-stage biopharmaceutical company, a high-risk, high-reward bet on the success of its drug pipeline, primarily DKN-01, an antibody targeting the DKK1 protein for various cancers, including colorectal and esophagogastric. The standard analysis would focus entirely on the progression-free survival rates, the objective response rates from their DEFIANCE study, and their quarterly burn rate. In that reality, LPTX was a story of hope and dilution, battling a challenging funding environment typical for small biotechs. The stock's heavy decline over the past year, falling over 85% from its high, reflects the immense pressure and investor fatigue that comes with the multi-year grind of clinical development, especially as they had recently initiated a process of exploring strategic alternatives and announced a workforce reduction. The expectation was either a modest partnership, a continued slow burn, or a complete wind-down. Now, the reality is that the company has fundamentally changed its DNA, executing a financial and operational pivot that completely upends the traditional biotech valuation model. Instead of solely evaluating their cancer drug pipeline, investors must now also consider the volatility of Zcash, the expertise of the new chief investment officer appointed by the private placement, and the long-term viability of a digital asset treasury in a publicly traded entity. The sheer volume that is poured into LPTX shares today, well above the stock's average volume, is purely a reaction to this existential shift, signaling a new group of investors entering the field, those interested in the digital asset play rather than the biotech one. This contrarian take that the cancer drug pipeline is now secondary to the crypto treasury is what must force a rethink for anyone looking at this stock. It is no longer just a biotech, it is a bio-crypto hybrid, and the trading action reflects this immediate, sharp adjustment. Looking at the recent stock movement, the dramatic nature of this pivot is clear in the daily trading range. The share price has been bouncing violently between its low for the session and a sharp high, indicative of a classic speculative rush where early investors who held the stock through its biotech struggles are booking profits, while a new wave of digital asset-focused traders are aggressively buying in. The institutional activity, which has traditionally been cautious and focused on the biotech thesis, with holders like Vanguard Group and Geode Capital Management focusing on the company's place in the health sector, will now need to reevaluate their positions. The narrative is shifting from clinical milestones, like the final data from the Defiant study presented at ESMO, to Treasury strategies and the price of ZEC. This shift in focus is significant because it introduces an entirely different set of macroeconomic pressures and sector momentum factors. Instead of being correlated with the biotech index and FDA regulatory news, LPTX is now partially exposed to the broader sentiment in the cryptocurrency market. This duality of risk is a key aspect of the current price tension. High volatility and high volume are the natural consequence of combining two highly volatile sectors under one corporate roof. Traditional investment platforms like Fidelity or Schwab Intelligent Portfolios would typically categorize LPTX strictly as a high-risk healthcare stock. But this new strategy complicates that simple categorization. The individual investor, using self-investing platforms or an individual brokerage account like Robinhood or SoFi Invest, is the one driving much of this speculation, easily able to react to the news of the capital infusion and the associated crypto play. To understand the full context, we need to briefly touch on Leap Therapeutics' original business model. It was, and technically still is, a clinical-stage biopharmaceutical company dedicated to developing targeted and immuno-oncology therapeutics. Its main asset, Sirexatamab, DKN-01, is a monoclonal antibody that targets the DICCOP1 protein, which plays a role in various cancers. The idea is precision medicine, identifying patients with high DKK1 levels and treating them with DKN-01 in combination with other therapies. Earlier clinical data, such as updated results from Part B of the Defiant study in colorectal cancer, showed some promising signals, particularly in subgroups of patients, demonstrating a benefit on overall response rate and progression-free survival. The company also has a preclinical asset, FL501, targeting GDF15 for cachexia. The older reports consistently highlighted the chronic challenge for a company of this size, securing enough money to fund long and expensive clinical trials. The strategic exploration of alternatives and the 75% workforce reduction announced earlier this year were strong indicators that the traditional biotech path was becoming unsustainable without a massive infusion of capital or a partnership. The $58.88 million private placement, while large, was not just traditional biotech funding. It was specifically earmarked to initiate a digital asset treasury strategy, which is the critical difference between expectations and reality. The future outlook for Leap Therapeutics, or rather the newly formed Cypherpunk Technologies Inc., is now bifurcated, and this is where the core investment debate lies. Scenario 1 is that the digital asset treasury strategy, which involves accumulating Zcash, provides a stable, long-term, non-dilutive capital base. If the Zcash holdings appreciate significantly, it could secure the money needed to continue funding the DKN-01 and FL501 programs well beyond their previous cash runway. This creates a highly opportunistic setup where the core biotech pipeline becomes a free option for digital asset investors. Or, conversely, the crypto treasury provides financial assurance for biotech investors. Scenario 2, however, is the significant risk. The digital asset market is notoriously volatile. A sharp downturn in Zcash's value could quickly erode the treasury, leaving the company in a worse financial position than before the capital raise, having sacrificed its identity without securing long-term funding. The opportunity here is the potential for appreciation in the Zcash holdings, driven by the broader crypto market, which could significantly exceed the capital appreciation expected from a pure biotech play. The risk is the fundamental uncertainty of marrying a biotech balance sheet with a volatile crypto asset. The current analyst consensus is mixed, with some still rating the stock a hold or reduce. reflecting the skepticism surrounding such a radical pivot, yet the high target prices from some analysts, reaching over $3, hint at the massive upside if either the drug pipeline succeeds or the Zcash holdings appreciate substantially. This is no longer a simple biotechnology investment decision. It requires a sophisticated view of two distinct markets, making it a far more complex proposition for those using platforms focused solely on traditional equities, such as Fidelity ETFs or interactive brokers trading setups. This unique risk-reward dynamic is what will keep viewers engaged as the story unfolds. The ultimate authority in this situation comes from acknowledging this fundamental strategic dual reality. The core tension remains. Is LPTX a speculative digital asset investment that happens to have a biotech shell, or is the crypto treasury simply a large, non-traditional financing mechanism for the biotech core? The market is currently pricing in the